Hello, it's Big Chuds, and this is the Trading Encyclopedia Daily Education series on my YouTube at Chuds Trading. You can find me on Twitter at Big Chuds and Bitcoin Live, where I am a founding analyst. For today's lesson, we're going to talk about wedges, bullish and bearish wedges, or rising and falling wedge. So here's just a quick AI overview. And there's some differences here. It talks about the trend lines, how they slope. So let's look at some images. So we know a flag and a pennant. Now, a flag has parallel lines. The flag can be going down, sideways, or up. And the pennant has converging lines. It's really a symmetrical triangle. Now, with the wedge, they're converging much more slowly. They're creating this wedge. So a falling wedge is bullish. Most of the time, you're going to see the price advancing out of a falling wedge. And a bearish wedge, you're going to see the price most of the time going down. Now, this is a rising wedge. This is a falling wedge. Now, you see the biggest difference, right? Look between the pennant and the wedge. Has a similar lower boundary. But here, with the wedge, is a rising structure, rising highs that will very slowly meet, creating this wedge versus the pennant, where you have the price converging into the symmetrical triangle. Now, like a flag and like a pennant, there is a flag pole. So, for example, say you have the price advancing. Here's your flag pole. And then you begin a falling wedge, very slowly converging trend lines, as opposed to a pennant, as opposed to a bull flag, right? Now, we see in this falling wedge, very slowly converging. Now, ideally, you'd want to see this complete. Again, you don't want to see a falling wedge going all the way down to here. Like, what's the point of that? You don't want to retrace the entire move. So it's a half-mast program pattern. It should be a short continuation pattern where you have move, consolidation, and then continuation. This is just the falling wedge variety versus the rising wedge variety you see again after an advance. Here you see a rising wedge that is a bearish. Here's a falling wedge that is bullish. Again, with the rising wedge, you have the trend lines convert like this, very gently rising, as opposed to, right, a symmetrical triangle, as opposed to some type of a bear rectangle or a bear flag. You don't need to get too caught up in the definitions, right? You have flagpole, consolidation, and then you can take your measured move based on the height of the flagpole. You want to pay attention to structure. The biggest difference is going to be you're just identifying it, but it's still just consolidation after a move down. And most of the time, trends tend to continue, right? So you can make a trade based off of a break of the trend line, but I would identify a key low or a key high and use that to manage your risk. But you can just see the difference, the converging trend lines, the parallel trend lines, and then the wedge here we see, right? In the falling wedge, bullish, the rising wedge being bearish. This is the Trading Encyclopedia Daily Education series on my YouTube at Chuds Trading. Find me on Twitter at Big Chuds and Bitcoin Live, where I'm a founding analyst. Thank you, folks, and I'll talk to you soon. Big Chuds out.